one of the things that I've said thousands of times over the years is that return of capital is far more important than return on capital. And the first thing that we want for our traders is to make sure that they're working with a regulated and reputable broker, and that they're not going to have any issues with deposits, withdrawals, and fair trading conditions. And I can't guarantee that with a broker that is located somewhere in the world that I couldn't point to on a map.
Welcome back, everyone. Today I'm sitting down with Justin Hertzberg. We spoke again a few years back. It's been a while now. So what's up, Justin? How's it going today?
Everything is great. Thanks for having me on again. It's nice to see that your business has blossomed so much over the years since we last spoke. So congratulations on all your success.
Yeah, and same to you. I know we've been talking a bit off air before, and you grew a lot for sure. You've been achieving some big milestones, and you're going deep into different topics regarding brokers. So I just want to ask you, like, very general, what's been going on since we last spoke? What improved in terms of your business and what you're doing now?
Well, I think, when we spoke, it was probably 4 or 5 years ago. At that time, we were still one of the larger introducing brokers globally. But over the last 4 or 5 years, we've seen tremendous changes in regulation in major markets like Europe and Australia. We've also seen the rise of crypto and other asset classes that people want to focus on and trade. So there's always been challenges and hurdles and adaptation we've had to undergo as a firm to continue to be relevant, to continue to provide the service and the value that that traders globally are looking for. But fortunately, I think we've done that pretty well. So our introducing brokerage business has grown substantially over the last 5 years or so, continues to grow year after year. Frankly, right now, we're absolutely exploding in terms of our business growth, which is great. And we started, if you remember, with an NFA license here in the US where I'm located. And then several years back, we added an FCA license, which gave us access to all of Europe. And we have another company that deals with the rest of the world for introducing brokerage. So we're really able to service the globe and traders from everywhere, which is great. And we do have traders from everywhere. And really, our business at its core has remained the same since we started it 8 years ago. We are a client-facing, client-first introducing broker. We are not pushing traders to work with any one particular broker because that's where we make the most money. Our objective is to actually take clients through a consultative approach and help them find the right brokerage solution for their particular trading needs, taking into account a variety of different factors, such as the products they trade, the jurisdiction in which they live, what platform they prefer, desired leverage, holding times, number of trades per day, all sorts of different variables that go into trying to find the right fit and helping them to figure out which broker is going to work best for what they're trying to accomplish. And we do all of that. And on top of it, we still give clients cashback rebates with whatever broker they trade with. So we're pure value add to the end trader. We've always been that way. We charge nothing for our service to them, and we only lower their cost of trading. So it's been a business model that's worked really well. And then the really exciting thing that we've been working on for the past year and a half is because we work so closely with traders and with brokers, we've really gotten to understand what traders want and where the brokers are failing to deliver. And what we decided to do was to create a technology company to address a lot of these shortcomings and bridge the gap between what traders are looking for and what brokers were ultimately able to deliver. And we've got a number of really cool pieces of technology that we've since built by bringing on a really experienced programmer who's been in the industry for probably 25, 30 years to help us take what was in our head and reduce it to code and make it available for traders. And the most successful product we have right now by a wide margin is end-to-end automation to support prop trading firms or funded account programs, which are really exploding in the marketplace right now. And we've had the luxury of servicing a lot of these companies on the IB side going back to 2016. And through that relationship, we got to see from the inside out how these firms operate, what the commercials are, and more importantly, what the pain points are. And the biggest issue that these firms have is the automation, is how they can scale their businesses without having to continue to hire more and more people to manually create the demo accounts or the assessment accounts, to monitor the trading activity for adherence to the rules of the program, to manage the new account, the live side of it, the account creation, and more importantly, to manage the capital risk associated with traders all over the world trading your capital and making sure that they're adhering to the rules and not blowing your money. And what we've done is basically built this end-to-end automation solution, which works hand in hand with the funded account program to capture the trader's information at the time of purchase. And from that point forward, we've automated everything for both the trader and for the firm itself with a various array of APIs and front-end GUI systems and trader dashboards where everyone can see how the traders are doing relative to the rules that they're trying to adhere by and the goals that they're trying to attain. And it's going phenomenally well. We probably represent somewhere between 20 and 25 funded account programs globally now. And I think we have somewhere north of around 20,000 traders that are using our technology every given month. So it's that's been really exciting. We feel like we're far and away the best in the industry in terms of that technology and absolutely on trend for where things are going.
So that's something we'll have to talk about for sure, the platform side of things. The other thing I want to point out is the fact that when I began working with you with the Forex Park Effects, that's mainly because of the structure you had, where you are not benefiting from it that much in terms of you don't get paid from the trader, you get paid from the broker, and the client get also a part of it as well, which is pretty cool. The cashbacks, that was something that I found pretty amazing when I started to work with you before. So that's been a good thing for sure for a lot of traders, and we'll try to put some links below for that, of course. The other thing I want to ask you is what have you seen are some of the trends or like the advancement in terms of brokers? What do brokers work on these days that it's kind of like the new trend I think that they have to provide clients with?
Yeah, it's a great question. What I would say is absolutely on trend is the push towards being multi-asset. You really can't just be an FX broker these days. And so, if we look over the last 5 years, where the trends have gone, you've seen brokers that were FX only to then FX and CFDs with a focus on indices and metals to then adding CFD futures and other on-exchange future style products. Then we've seen a push towards adding equity shares. And then obviously crypto has taken a lot of interest. So really the brokers that are best positioned these days, just from a product offering, are the ones that are as multi-asset as possible. Especially when you're talking about an offshore environment where you have the benefit of trading all these products as a CFD, you can have cross margining where you trade everything in one account, which is a really nice luxury. Things are a little different here in the States where you don't have the benefit of cross margining. So you have to have your own FX account, a separate stock account, a separate options account, futures account, crypto account, and so on. It's a little bit tougher here in the States with the way that the regulations are written. But for the rest of the world, that ability to trade all those products from one account is a tremendous offering.
What about platform? Are there some platforms that are getting more popular than others? I know in the past years, TradingView has been one of the platforms where broker want to move to now. They want to be able to integrate with TradingView. Are there any kind of main platform that brokers are going toward, or is it still mixed with different platforms?
There was a really big push several years ago from MetaQuotes to try to get firms to stop offering and using MT4 and to start promoting MT5 a bit more. You're starting now to see that take hold a little bit, but brokers are not getting rid of MT4. They're just adding MT5 in large part because MT5 is better positioned to be a multi-asset offering. So MT5 is definitely growing in popularity. TradingView has absolutely exploded in terms of popularity, and it is a very accommodative platform, certainly for charting, socially for the social aspect of trading. It is a tough API to integrate for execution. So you're still looking at a very limited number of firms that are integrated from a trading execution standpoint with TradingView. But I anticipate that number is going to increase over the coming years as well, just because if you're a brokerage firm, you want to be where the traders are. And TradingView has a very large captive audience and loyal following. So it behooves the brokers to figure out how they can integrate with TradingView as an executing platform. Spotware with the C-Trader platform continues to have a very loyal and steadfast community. I think it's one of the better platforms out there that traders like to use. What we have seen, which is surprising and not surprising, is that brokers are really not investing that much anymore in their own proprietary platforms. That was something you saw with a lot of the largest firms out there. They would have a proprietary platform. But I think that they're finding at this point that the cost to build, the cost to maintain, and the cost to educate the consumer on a platform that's only good with that particular broker is too cumbersome, too expensive. And so they're finding it easier to just offer the platforms that traders are already looking for and find other ways to differentiate themselves from their competitors.
Interesting. Do you think we'll ever see algos like expert advisors that you can trade automatically on TradingView, or is that something too difficult to do, you think, with brokers?
No, I think the rise of Algo is continuing. I think you will find more and more people gravitating to it. I think you'll find more and more third-party technology providers that make for easy conversion from basic logic or natural language speaking into programmatic language. So people who don't know how to code can still reduce their trading strategies to code. There's a really great technology firm out there called Capitalize.ai that is, I think, ahead of the game in this process. They basically allow you to basically type in the logic of a strategy, and it will actually create the code for you. So you could say, every time the S&P goes up 1%, I want to buy, 2 Bitcoin, if you will. And you can create very simple lines of logic like that without actually knowing anything about coding. And it will do it for you, which is a really interesting thing. And I think we'll see more firms trying to tap into people who want to trade via algo but don't have the programming skills, like me. So I think we'll see more of that as well.
That's pretty cool. Now, on the other hand, you have all these regulations that are coming in with different countries. Sometimes I know Australia in the past few years have been having a lot more rules regarding trading in Forex. What do you think is the future of these regulations? Is there going to be more? Is it going to be tougher to trade, or is it going to get somewhat easier in some ways to trade?
Overall, I think the regulation that's going in is well intended. I think sometimes the regulators either lack creativity and they just copy what another regulator has done, or they are more of a knee-jerk reaction to something that they don't like, and they feel like they need to take a big stand against what's happening in the industry. But to an extent, it has an unintended effect. When ESMA passed the new regulations in Europe several years ago, when ASIC passed its regulations earlier this year, all the brokers did was pivot. It affected their clients in that country or that region, and anyone outside of that region would be shuttled off to an offshore brokerage that they had already set up for themselves to service the business in the way that they've always had. So I don't necessarily know if it's helping long term. I think it's well intended. Do I think that things will get easier? I don't think that regulation is going to get to where it needs to be until you actually have more cross-border cooperation. The regulators now have all sort of copied each other to a great extent, but what I would like to see is reciprocity, where someone located in the US can legally trade with a broker regulated in Europe or regulated in Australia, and vice versa, and so on. Because I would like the regulators themselves to communicate with one another and realize that there are other jurisdictions with strong regulation, and they should allow traders a bit more choice in where they want to trade. I think that would be a very good thing, certainly for people here in the States. But there are also people located outside the US that might feel more comfort in trading with a US broker if they could, for the security and the stronger regulation and capital requirements that we have here that we impose on our brokers. That would be something where I think if the regulators actually got together, it would improve the industry. But I'm not sure if that's necessarily happening yet.
Totally agree with you on that for sure. I get a lot of messages of people who, because of the regulations, because they're limited in leverage in their countries, or because of they're limited in what they can do with the brokers in their country, they turn to kind of offshore brokers with less regulations, or some that are just plainly not regulated at all. Why isn't that a good thing? Why shouldn't people do that?
The issue is that the offshore brokers that operate really in an unregulated capacity, they have no supervision though. So, we have to accept something that we don't always like the regulations that are passed down, but the regulators are there to protect the average retail trader. They are there because they know things that trader doesn't. They know what happens in the dark corners of this industry, and they're trying to protect people who don't have the wherewithal to protect themselves. And you want to work with a broker that is regulated. It's one of the things that we strongly stress to our clients, because you want someone overseeing the activity of your broker. You want them to know that they've got the capital to run their business and to return your funds if you need them. You want to make sure that they're executing trades in a fair and equitable fashion. You want to make sure that their pricing is consistent across all of their customers, that they're not just playing games with you. If no one is looking over, their shoulder, they have less reason to operate in a fair way. No different than if you're, in a car driving on an empty highway. If there's no one around, you're gonna go a lot faster than the speed limit. But if there's other cars and if there's, police around, you're going to be more adherent to the rules that are set out there for you. And we basically take the view that the regulation is there for the trader's protection, whether they like it or not, or they feel like it's good regulation or not. And one of the things that I've said thousands of times over the years is that return of capital is far more important than return on capital. And the first thing that we want for our traders is to make sure that they're working with a regulated and reputable broker, and that they're not going to have any issues with deposits, withdrawals, and fair trading conditions. And I can't guarantee that with a broker that is located somewhere in the world that I couldn't point to on a map.
A few brokers, and especially Australia, recently have been they created a second entity because of the rule in Australia to kind of be able to accept clients outside of Australia. Is this a good thing, or you think it's a bad thing? I know they have things around it to make it more secure, more safe, but is it a good thing to have the second entity based somewhere else that is still part of the main brand, but kind of a different entity?
I think it's just a necessary thing. I think any one of us put in the same position as those brokers would do the same thing. Our primary objective is to protect and grow our business. So if someone is making it difficult to operate at home, we're going to construe those new rules in the most narrow way possible, and we're going to try to service the masses in the most advantageous way possible. So I think the brokers are doing what brokers have always done. They're surviving. They're figuring out the best way to operate and to continue to offer the trading conditions that traders want. What gives me comfort in those situations is that these brokers are well established. They have robust processes and operations and how they run their businesses. And even though they're located now, while maybe in Australia, but also in some other part of the world, they're always going to another regulated jurisdiction. So they're not setting up an unregulated branch, for one. The other is that they typically keep the same business practices that they have. So if they typically segregate client funds, they'll segregate client funds in the offshore jurisdiction. They'll use the same payment service providers and banking system that they have. They'll apply the same pricing and execution models that they do. So everything remains very consistent. They're not looking to take advantage of those traders by moving them offshore. So I think there's good intention there. And what you see with the smart ones, at least, is that when they go offshore and there's less regulatory protections for the traders, they'll do other things, such as provide insurance policies on client funds and other things that they can do to say, hey, look, we recognize we're moving to a less regulated jurisdiction, but we take your protection very seriously. We want to protect your money and show you that we're not doing this because it's a shortcut or an easy path. We're doing it because we want to continue to service you in the way that you want with all the protections that you had before.
I definitely want to hear about the prop firm side of things. So a lot of people have doubts about how prop firms work in the background. So could you explain how overall that works, this process of being able to allocate capital to traders from a prop firm kind of viewpoint?
Yeah. So, prop trading has been around for decades. And historically, it was something that you saw more on the institutional side of the business, where you'd have these really well capitalized firms that would take very intelligent people right out of college. They would train them on how to make money in the markets. They would teach them the edges that they'd learned over decades of trading. They would give them advanced analytics and tools and technology to exploit that edge and so on. And my partner, Trent Hare, he started his career as a futures prop trader and did that for several years successfully. And actually a number of his brothers did as well. But over the last few years, we've seen a rise in prop trading for retail traders, where the general workflow is something like this. You'll have a firm that will basically say, if you can take and pass an assessment that we offer and adhere to our rules and achieve our goals, then we'll give you a funded account to trade. And the premise is really very simple, very straightforward. Where someone will pay a small amount of money to audition for a broker, or for a prop firm, pardon. And if they meet those rules, then that prop firm will give them capital to trade. It's a very profitable business model. It's a very successful business model. There are many, many traders out there that are essentially looking for a lifeline. They have a strategy that works. They just don't have a lot of capital. It's one of the major problems that we see with traders all over the world. And what happens is they over leverage those accounts. And yes, you can make money that way, but leverage is a double-edged sword. And if you don't have a lot of capital and you're trying to hit a home run, you could also blow your account. And that's what a lot of traders do. What's brilliant about this model is if you're working with a good firm that has capital, they give you a substantial amount of capital. You don't have to over leverage your account to make a lot of money. In fact, they typically limit your leverage that you can use in those accounts because they want you to trade with a larger amount of money and make steady and consistent gains with that money. And typically the way that these firms are structured is if you make money on their money, then you keep the lion's share of the profits. You keep, we've seen anywhere from 50 to 80% of the profits that you make for these prop firms, you as the trader get to keep. And so it's a booming business. It really attracts a lot of people, certainly from emerging markets who are really fascinated by financial markets, but they lack sufficient capital to really get started in a meaningful way. And we just wanted to be able to service and offer a solution to these businesses, which really are, we probably see 10 to 20 new ones pop up every single month. Some of them are very small and not successful, but some of them are pretty substantial in their reach and the number of traders that they can connect with. And the technology we built is just, it's incredible. I mean, we've been in business for 8.5 years. And we've done a lot of great things over the years. The technology we built to support prop trading is far and away the greatest thing we've accomplished. It is basically like flipping a switch in a business where, if you're really good at sales and marketing and you've got the capital for a prop trading business, but you don't have the manpower to administer it, you don't need it. We have one client of ours is a well-known education company that has been around for probably a decade. They wanted to move into the funded account business. They were a 3-person company. They added our technology on, and they are still a 3-person company a year later, but they're now making, as a prop firm, they're making $1 million a year with the same 3 people, just using our technology. And we have another firm that we're working with now where I anticipate that once we finish the integration with their program, they'll be able to actually cut about 30 positions within their company because we replace the need for those people through automation. So it's really great technology. It's great for both the admin side of the business and actually for the trader, it's phenomenal because we have a real-time trader dashboard. So whatever the rules of that program are, you can see in real time how you're doing against all of the rules, how you're doing against your profit goals or your daily loss limits or maximum loss limits or other metrics to which the funded account program holds you to. And you're no longer operating in the dark. You no longer have to call someone to see how you're doing. You no longer have questions about what the rules are. Everything is right there available for you with your own private secure login to a dashboard. So it's really it's a great piece of technology. It's our biggest issue is getting it out fast enough. We build everything to the specification for all of our clients. So we've had to continuously add developers to our team over the last year just to meet demand. So I'm learning a whole new business. I never set out to be in the technology business, but we're learning about man hours and how long it takes to get something out the door for a client and working to reduce those lead times. And we're getting a lot better at that. So that's been good. And it's an exciting business model, and we've got some other cool pieces of technology as well that we're working on and have deployed with certain brokers and firms as well. But that's definitely the one that's most popular.
Yeah, so 10 to 20 new platforms a month, that's a lot for sure. More than I thought. So it's pretty crazy. Now, what does the capital come from these platforms? Is it based on their own capital? Do they find investors to have the capital? There's a lot of speculation about the fact that they just make money from the fees for the platform, then they are able to pay people with that. But I'm not sure that's how it works for most platforms. How do they get the capital?
You see different business models. There are some that are extraordinarily well capitalized that have investor-backed relationships. Those are typically among the most successful ones because they have more capital that they can allocate, so they can cast a wider net in terms of looking for good traders and funding as many traders as possible. You see others that fund their prop business through the revenues they take in on the assessment side. That's more of a bootstrapped model where they can only grow as fast as they grow the number of assessment takers. That's not as successful a model, but we see a lot of things in between those two extremes. Yes, a lot of the prop firms make most of their revenue through the sale of the assessments on the front end. However, the ones that are really well capitalized and well run are really looking for those diamond in the rough traders, the ones that are special. And if they're well connected in terms of the way that they run their business, they can go and actually build entire businesses around those traders. And that's really the long-term objective for a lot of the high-end firms, is to identify really talented people, basically take an ownership stake in that person's trading activity and go out and market them for institutional capital. That's a great aspect of this type of business. It's not every firm that does that or is capable of that. But that's one of the real benefits to being a trader with a small amount of capital, but a talent for trading, is that those opportunities are out there.
And I imagine they have some parameters to control the risk where all the trades get closed, they hit a certain point, or some kind of resources to cut the trader if things go wrong, right?
Yeah, so that's really where our technology differs from basically what's out there. For the most part, prior to when we released our technology, to manage the risk and the rules for the programs, traders would have to use a number of different third-party pieces of technology, and then they'd have to have people manually monitoring how performance was going. So you would end up with a lot of he said, she said problems, right? So let's say that there's a rule and you as the prop firm say that I breached the rule and you cut off my access to an account, but I'm the trader and I disagree with you. And I say, no, I didn't breach that rule. And I complain to you. You never want to be in that situation, because now the person who is essentially your partner is now your enemy, and you're on opposite sides of a key issue. What we do with our technology is We review all the activity in every single account every minute. And if a rule is breached, we notify both the administrator of the firm as well as the trader in a variety of different ways. They'll get a message in MT4 on the comments field. They'll get a message in our trader dashboard or the admin portal, and they'll get notified by email as well. But that notification is going to include more than just a, hey, you breached a rule. It's going to tell you the timestamp of when you breached the rule. It's going to tell you the order ticket that you breached the rule, and it's going to tell you what rule you breached. And it does that automatically. So you no longer have to have people monitoring your trading activity to see if this occurs. It's all done via API. And what it does is it really de-escalates these situations. It's very hard if you're a trader to say, no, I didn't breach a rule, when within a minute you show them exactly what rule they breached and what trade and so on. And what it does is it actually tends to reinforce the good trading habits that you as the prop firm are trying to instill in your traders, because you're giving them immediate feedback as to what they're doing well and what they're doing poorly. And it actually tends to foster better trading behavior going forward from those traders.
Is there a limit to the instrument platforms can offer, or is it they can offer pretty much anything they want, just based on what they decide to offer?
It's a combination. The prop firm can basically choose what products it would want to offer. However, everything has to be plugged into a broker on the back end. So you're still limited to what products your partner broker offers. We see prop firms that are FX only. We see ones that are FX and CFD. We see ones that, work with multi-asset brokers, but they specifically want to exclude certain assets because they deem them to be too risky. So we see certain firms that completely eliminate crypto from the offering, not because they don't find it to be a viable asset class, but because that's not the risk that they want to take with their capital. So it just depends. But with our technology, it doesn't make a difference. You could be trading ears of corn and we'd be able to integrate it. So it's we don't have a limitation. It's just really what the prop firms want to do and what the brokers will allow them to do.
Yeah, definitely insightful to hear about the backside of things too. There's so many myths about prop firms that you hear online or something, that it's good to hear how it works in the background too. And I think that's been good to hear. Also, the broker knowledge, I think, is really, really key. Where can people find you? They want to connect with you or reach out regarding either brokers or prop firms or anything in between?
Yeah. So for the introducing brokerage side of our business, for any traders that need help in choosing a broker or just want to look at saving money through our cashback rebate program, they can contact us at forestparkfx.com. And for those that are interested in the prop trading technology or some of our other technology, they can find us at fpfxtech.com. And I'll send you those websites, Etienne, just so you can push them out with the description of the podcast.
Perfect. Yeah, we'll make sure to put them in the description below. Yeah, for sure.
Yeah. I appreciate that. But yeah, I mean, they can reach out there. We're extremely responsive. That we always answer phone calls and emails immediately, pretty much any time of day. So any questions, we're happy to answer, and hopefully we'll be able to help and service some of the people listening in.
Awesome. Thank you, Justin. It's been good to catch up and be good to be able to discuss these new things that you're also coming up with, which is really nice. And let me know if things are coming up that are new also. I do want to hear about them for sure. It's really interesting to hear the background of things sometimes. And I'll catch you guys pretty soon.